Hey traders. All right, let's take a look at what happened in the afternoon. Our expectation was bullish on this market. So now we could take a look at just exactly what we got and how it worked. So let's see, I know the problem is I did not turn on my little drawing thing. Okay, so looking here, we had our bearish sample come in that I didn't really like. It was the way it lined up. We got another one a little bit later and just sort of, kept hitting there. Bears were not coming in. And if you look at, which is here, you see these, and there's our volume coming in. And then what you want to do is look at, well, what are the bears doing with these? And you can see they basically, right through this area here, there's a little bit of impact. So I think there were a couple of bears who actually came in and gave it a try. It just absolutely worked against them. And if you remember, the reason is because, look at this, immediately they'd be up against a wall. That's why that was the reason for the skepticism. The bulls drained the profits. They took it all out of the market. There was nothing left for the bears. So as we move forward, look at this. We get sort of a switchback where it comes up, tests them, and then right here we get our bullish sample. Hello, bulls. And you can see the bulls say, yeah, we're probably just going to go ahead and take that since that was the plan all day anyways. And you can see the bullish sample shows up. It's right on the back side of these guys, and their stops are going to be sitting here. We have the expansion bar target, which is just the first untested sweep right here. So it's just going to be right up here. Other than that, there really wasn't much to the day. It was just recognizing that there were no profits to be had for the bears. They got a nod, and by the time they could do anything about that nod, there was no money. So this is a day where you have to understand the concept of a nod. You got to have the bulls or the controlling party say yes by not acting, and we saw that here. And then this is a confusing signal here. You get the nod, and then you get another, it's like, wait, I thought you guys said we could have it, and then they take the position. Now, the bears will still come in and try, even if there's a second position that does like this. They'll still say, no, you gave us a nod, so we're going to take it. But by the time they ended up getting anywhere to have positions here, there was just nothing left to take advantage of down here. So I think they give it a little go. I think the bulls were all positioned up, ready to go here. Maybe a bunch of longs sitting here going, yeah, you drop down here, we're gonna fill. The market was like, picked up, bulls hit. So what we have here is this is sort of a non-position. This is the one because it was a nod. So we have a bullish position here, and this is going to be the root. We have another bullish position here. This is right there. And we have the bears, which I think that this was the one, because this is the one I was expecting right there. And that's going to be the position that the bag holder. So this is who's paying, and they are paying these two groups. And they will pay up until their stops, which I think are sitting above this bar here. Let me head, something like that. I'll mark it on the chart. And what they're paying for is their misunderstanding of market structure. Again, that's always what you pay for. I think bulls at this point will probably have their stops. If we get down, we shouldn't be getting down to those lows. We shouldn't test the expansion bar because of the way the structure of this market worked. So, we got just exactly what we wanted. I don't see anything else. And this is if you've been following this for the past couple of days, I really hope you recognize the thing we're doing is building a narrative so that you just get what you want. You understand what you want, and then you get what you want. We wanted to see bears come in. I thought the bears would hit a little harder like this, and then we get a bullish signal. But they failed, and then we got the bullish signal here, which should have been pretty clear. So it was not, what I imagined, but I got exactly what I wanted, and those bears are now running out the people who made a mistake, which in this case is the bears. You should also be noticing that the dominant party is the one who's tending to make the least mistakes. The bears are making mistakes. These guys made the mistake of thinking there was money to be had, and it turned them over. In previous days, they made mistakes of thinking they had a nod when they didn't, or they thought they had somebody trapped when those people weren't holding. It's mistakes that lead to you going underwater, and that's also what gives rise to the dominant party. These bulls here are the cunning ones. These ones are the root position. They're sort of trailblazers on the day, but mostly I think that this position right here is an add to a major swing. This is by far, this is the best intraday position you could take because you had clarity, you knew what was going on. You could ride it up and take your profits a couple points and make enough to have a significant impact on your trading account. If you just get these little tiny scalps, like if you're trying to catch like this move, and what'll end up happening is these little moves here, they don't create significant impacts in your trading account. And so what happens is your trading account makes money little by little if you're doing really well. But over time, the one bad decision you'll make next week on a Tuesday is going to wipe out all your profits because your returns are not significant enough to deal with any drawdowns. It's just, if you can continue to make returns, it's good. But if you take one decent drawdown, you're out of the game. And you need the types of returns that actually have an impact on your account, like they grow. Like if you take out taxes and then you take out maybe a paycheck and then you take out diversifying your investments, of a single contract here that makes you 10 points at $500 after all is taken out feels a little bit more like $20. Like it gets. So you have to remember that it's not successful enough to just be constantly successful. That's nice, but you'll find out that doesn't actually work. You need to be successful in a little bit better way where you can have a little bit bigger returns than just ranges and stuff, or you just constantly find out your account gets wiped back to break even. So the idea here was to spend the morning gathering data until we figured it out. I think it was pretty clear it was happening about here. I don't think it would have really been actionable for me until I saw this right here. This is where that I think it was actionable. This is where I think it was clear. I mean, you could have taken action here, but you want to say, I expect to get the bears and the bulls, and then you try and act where that's what I wanted, and then you do when it gives it to you. So that's what we've done this over and over and over and over. And this is the same thing that happens pretty much every day in every market. One side makes a mistake, the other side wins. And the trend tends to be in the favor of the side that's constantly winning. So you can define a trend outside of price. And a lot of people define a trend as something that goes directionally. But if you have a market that's sideways, but the bulls are constantly winning and the bears are constantly losing, price isn't moving, but the trend here is that the dominant party is the bulls. And eventually that trend will break for the bulls. Not for the losers, for the winners. And that's just how it works. We've just had a nice convenient uptrend to also, be on. And the upside moves tend to move better in a trending market. But you'll see that trends don't have to do with the direction of price. They have to do with the destruction of the counterparty. So we have these guys here. Hopefully that this all has made sense. If it hasn't, go through the day on your own, see if you can mark it out. This all had to do with the fact there was just the bears finally got their nod, and it was an empty bag. And then they tried, someone actually legitimately, you could see that. You see that move down right there. Somebody legitimately tried to pick up this position thinking we have an elastic market. Let's go for it. That was the wrong choice. So in previous days, we were knocking out shadow traders. I don't think this is shadow. I think there were some decent sized players who got pulled in here, and that's going to lead to a better payout. You catch a bigger fish, you get a better pay. That was a bigger fish making a structural error. And this was the guy who was waiting patiently in the sideline. That was the spot we were waiting for. So hopefully I explained this well enough that while I wasn't streaming, you guys were able to track that on Zoom and see the events happen like they're supposed to. And now we're moving up. I mean, the only thing here to do is wait until we get a pretty decent acceleration. And I don't think these guys there was probably some that had their stops here. I do think that definitely there were some traders, but I think the major players are going to be saying, here's where we're wrong. Moving up out of this, okay, but we're not really wrong until we get through this area here. And I think that's probably where the major players have their stops sitting. And that's where the market's going to want to go. It's going to want to go check that out. We have a couple of things in our way. The first thing we have in our way is this expansion bar target, which is going to have market makers. I'm going to get rid of my face. Market makers inventory. The inventory. And the inventory is where the market starts to slide. And one of the perks of being a market maker is you get to see all the orders, but one of the downsides is you are forced to provide liquidity to orders that hit the market. Market orders sell, you have to take a long. So they're going to have an inventory of, I don't know, maybe like 700 contracts long, sitting in their inventory that they don't want. And so this is not in the good inventory. This has been put into the hold inventory. You just got to hold on to it. We'll dump it or hedge it until it comes back, and then we'll let it go. So they're going to want to let this go once we get there. They're going to cover it. So there'll be sell orders. So what that means is you get up to that level, and the market goes like that. And that's those sell orders coming in saying, we're trying to dump our inventory on the market, so you eat the bad orders, and they don't want them. They're just bad orders, so they'll get rid of them. And that's why expansion bars have responses on them, is because of that inventory. So that's the next thing in front of us. If they can dump their inventory, boop, like that, then the next thing would be to just pop up here, see if we can get an acceleration up into the close as we get rid of this group of players who did their best but were just never right. They never had a chance. Okay, so I'm going to mark out here where I think the bulls are sitting. We'll make it green and solid, and I'll take off these things like that. And then we'll do another one. I think there are some bulls sitting about here because of the position. I don't think there's bulls sitting here. There could be some shadow bulls, but I mean, really, like if you held on to that, you're just... So I'm not going to track that. And then right here, we had about 3 positions. So just mark this right here and turn it red so we can see this is the layout for today. This is how it's all positioned. And there's not much else. Personally, I think if you get a nice move up like this and you're happy, take it. I don't know what the landscape, here's a hole in the analysis here, is I don't know what the landscape, when you have, I don't know what this landscape's going to look like as we get up there. I personally think that if you get a nice straight line between A and B, that the emotional cost is like 0. And the profit cost, on the market anyway, is, I don't know, 10, it could be like 10 points. Getting to C, though, usually has like an emotional cost that is, it's pretty high. The market's going to try and shake you. The profit cost, in my opinion, usually is only like 50%, which sounds good, but if you get 10 points free and easy, you could go for 15, but it's going to cost you a lot of emotional burden. So a lot of times I don't like to hold for the C, because this cost here is so high that it would just be better to take the money and then watch the market get to see if it's not a significant increase. I mean, if you're at 10 points and you think it's going to go 50, I mean, but if you're at 10 points and you think it's going to go 15 or 17, it's like, well, that's a big cost. I could just cut my trade here and be done and just watch. And it was quick, it was easy. I don't have a lot of emotional baggage. But, it's up to you and what type of trader you are and what type of things you're doing and stuff like that. I just think that I used to say it's the last point costs the most. You know, if you're looking at a hard target and it's like it gets right up to it and there's 1 point left between here and here, that last one looks like this. It's like bunk. And you're like, man, if I had just taken the money when it was nice and easy, I didn't have to sit for an extra 3 hours waiting for the last stupid point. Was it worth it? No, it wasn't actually worth it. So that's kind of where I'm at with this. I think this is a good move up. I do think there's we have decent motivation to get here. I'm saying this because we have, 40 minutes left in the day. There's plenty of time for the market to do all sorts of stuff. It's up to you what you'd like to do or how you want to manage it. I don't know, do whatever you want. But that's what I'm seeing. So there's not much else to go on here. Now, we've talked about what happened today. Now I want to talk about what's going to happen next. We're going to look for where are the players, what makes sense, what doesn't. We're going to try and model what can the Bears do and what can the Bulls do. So first spot, where are the Bears? Well, if we move down, we have Bears here and we have Bears here. If the Bears decide that they don't want to buy that, we could also move all the way down and sample the decay retest. So we have, sorry, this is the Bulls. I am so sorry. This is the Bulls. This is where the Bulls are. So any move down right now is going to sample Bulls. And a really aggressive move down would probably just find us a decay retest that would result in Bulls buying this up. I would absolutely expect this to be something that if we did get there, yes, they would buy it. Of course they would buy it. Another spot is if tension happened to get to 0, this is where Bulls could be too. So we have 4 spots we've modeled out. Because the decay retest is on the other side of a liquidity position, I'm not quite looking at it yet. That would be something I look at if we had this hit and they didn't pick it up. So now we know where the Bulls are. Any move down is going to sample Bulls. And with 40 minutes left, if the Bears decided to come in and slam advanced decline down to 200, maybe we could get the velocity to start to move down and get a sample, but I think the Bulls would just pick it up and run it higher. Where are the Bears? Well, there's switchbacks, which means, you push through and then there's a bear. Push through and then there's a bear. The problem with this is that I think that the Bulls would buy. So I don't think we would get to the Bears, at least in my head. I'm like, I don't think you're going to get to the switchback. So where else could they be? And there's another spot where Bears will have an opportunity, and that's here on the decay retest. So if the Bulls push, we start to move up and they get this going up higher, we could get a retest off the previous day's highs. And that decay retest would be an opportunity for the Bears to come in. Now remember, a decay retest is a last ditch position. It's a Hail Mary position for participants who've already shown they want to play. So have the Bears shown they want to play? I think so. They actually impacted tension here. They were willing to come in and inject some capital to try and make it happen. They got screwed, but they did try. So the other part of a decay retest is it has to be the last thing you can do. There can't be other opportunities. And it is. If we were to move up, we'd probably see velocity move a little higher. That's their only option. And that's what would give it power. We know they would want to play, and it's their only option. So there's a chance that at a decay retest, we could see Bears attempt to show up again. The trouble they're going to run into is the same trouble they've had all day. There's not much room to run before we run into a 0 test. And they're out of day, so this is not about the rest of today. Anything that happens from here on to the close is all about tomorrow. And I don't think picking up a decay retest today into the close is really going to offer an advantage tomorrow for the Bears. If anything, I would think that decay would give us a retest, right? Velocity could move a little higher. Tension moves a little higher. And then we see that retest get blown out. The Bears pick up liquidity on the stop out and try to pump tension down after they pick up a little bit of tension. We get up to maybe like 20% or something like that. Then at least they have some room to run. At best, that would be the best position they could get into, because then we have some room to run. I mean, that's where the bears could potentially find themselves. Okay, so now let's talk about worst case scenario. The bears just came in here and ran an algo. Remember, algos, an algo, which is a program like Fox News, just kidding. I mean, you can program people, right? People can be a program. You just say the right words and then they act. Sure, it doesn't matter how you do it. The program needs to do, algos are all about programs that do work. So the first thing, when you think program, it means reliable. News is a pretty reliable source. It's also much cheaper to run a news algo, which is have the news anchors say things that people are sensitized to, because it's reliable. It's cheaper because you don't have to put up the capital to move a market. It doesn't cost you $10 million to manipulate the news anchor. It's much cheaper. So you could do that way. You could run a financial program and, you know, take the bid and do that. You could flicker the bid and the ask on a bunch of stocks, you know, 1,000 stocks, and bring it, whatever, you know, it's going to cost you money. So this program needs to do work, and the work you need to do is to get tension in your favor. So if you run an algorithm, your objective is to get tension under zero. It doesn't matter what you do. That's your goal if you're an institution. There's no other goal. And the way you do that is you run out your counterparty. So the bears would need to run out the bulls, which means the algo would need to accomplish this. I think a move down would be, oh, that's nice. That was very pretty, feel good. But an algorithm that's going to run us from 39.10 down through 38.80 would be enormous. Enormous. It would need to be a news algo. I mean, just straight up financial algos usually can't push a market, sweep a market more than about 5, maybe 10 points. Maybe. News algos can cause a real slide because you can get a clamor. If you get enough people, you can get a 20 to 30 point move if volatility is looking right. But financially trying to just pull prices down, volatility doesn't freaking matter. Like moving price from here, from strike to strike to strike is expensive. So I think a news algo would make more sense if they're going to do that. They would need it to be news. They would have to run a financial backing on it. It's going to cost them $10, $20 million. It's going to need to shove through the lows, and tension's going to have to curl down in such a violent fashion that, you know, tension. But honestly, you put $10 million on it. We've seen this before. Like they did it on Tuesday. You remember Tuesday? They ran some algorithms right into the close into a buy position. It was a beautiful buy right into the close, and everybody bought it, and it went right up through. They're in the same spot. If they run an algorithm and they put all that money on the table, it's going to go, okay, you got through, you got to get it down here. And it's going to end up going, whoop, because if they get tension down here to zero, that's a zero test, and the bulls are going to come in and pick that up. It's a bullish thing. They're not going to let go of tension. Have you seen anything that makes you think the bulls are not going to show up? We saw them give a nod and then screw over the bears. That doesn't look like bulls quitting. It just looks like they're playing the game. I don't see anything here that says the bulls are rolling over for the bears. I expect them to defend tension. A news algorithm that drives this down would be stupid. Unless they're colluding, which means they might say, hey, you run an algo and let us know. The reason you'd call that collusion, there's one reason. It's speculative. It's saying we have a nod right here, which is a non-spoken agreement, right? Well, if there's no non-spoken agreement, well, it's probably a spoken agreement, and that's collusion. Actually speaking to another person about manipulating markets is illegal. Is it prosecutable? Well, you have to prove it, so maybe. So this is the issue that we're running into here is I think that across the board, the non-spoken agreement is better because it's easier, it's cheaper. Also, there's no paper trail. You just do it. And right now, if we see that algorithm run and we get down to here or close or something, there's problems. The bulls are not going to want to give up this. It's going to get folded over. just like yesterday. They dipped it down. These are not like at the same scale because I zoomed in, I know. So that's where the bears are at. Sure, you can run your algo. So this is worst case scenario for the bears, or sorry, for the bulls. Best case for the bears. If they drove this down, that the bulls are going to pick that up. Now, could they drive it down through those stops and keep it going and we see a major trend start? Sure, but they're going to need a big old fat catalyst. There's a Y. A-L-Y-S-T. This is no good. A catalyst. They're going to need like something on the news, something. They're going to need something that says, hey, everybody dump your stocks. Maybe Fox News says, hey, inflation numbers way up. Stocks are about to crash because you got a check or something. Maybe a bunch of people get scared. I don't think that would work. I don't know what you would need. But an algorithm is not enough. You need a catalyst. And the last major trend catalyst we saw was coronavirus, and it wasn't sensationalized. People were genuinely concerned, and that's what started off that downtrend. Well, what have you got here? Tell me, what have you got? So if there's something out there that could catalyze it, potentially an algorithm getting down, but then it moves up and you run your news catalyst, and then that could push down. And if you get that scenario, then we could start into a bearish, things would start to look a little bit more bearish to me, but even that's going to run into problems. So there's just not a lot for the bears right now. It's too expensive to run down. You have too many things in your face. And so this is a difficult situation. The bears can work through it, but it's going to take time. We're going to be looking at time before bears have a hand. Right now, the bulls are just fine. I mean, they're sitting here. Their stops are a pretty good way away. They know that if things move down, they're going to see support from the rest of the market that's going to bring things up. We have daily tension. If daily tension comes down to zero, that's a zero test. A couple of major things that are going to get supported by bulls. So what the bears need to do is to try and keep things from being too successful for the bulls. I mean, if the market just takes off and wipes them out, we'll just see more of this week, last week, just like this, because it's going to be the same thing. So if the bears could cast some doubt, if maybe they would keep running algorithms at this, price comes up and they run an algorithm, and their goal is just to keep it from successfully wiping out the bears. Maybe they could cast some doubt. Maybe, you see what I'm saying? Like, it's like, I just don't see any great options. Right now, I think the best option for the market is to say, hey, bulls, you're the minority. You're the ones who are, you're cheaper. The bulls could come in. They could literally just wait, just let it sit here and then pop it up in or just after the close. They could run those guys out because these are not shadow traders. I think this is actual institutions came in and gave it a go because of tension. They could just wait. They know those guys are going to hold. And so this is them trying to push their risk, the risk tolerance, which is probably here. Where a shadow trader, a lot of those guys will dump right at the close anyway. So you want to drive it up into the close. Otherwise, they'll just let go wherever price is at, and you lose optimization. So that's what I think these guys are doing. They're just like, well, we'll just sort of wait. It's not a time crunch. It's just, we're going to get there. So my expectation is this is the most sensible thing. We've talked about how this could happen. I think it would reverse it back up. But we've also talked about how a major trend could start with a catalyst at that point. So you need to be aware of them. So you could say, well, what do you guys need to be successful? Like, what would you have to do? They can't get bearish liquidity. They could get a decay retest, but that's a ways up. And we start rolling towards a decay retest and prices are going to go whoop. So, I mean, the bears just don't have any great options here. There's just not. So I anticipate the market pressuring those bears and continuing much of the same. Now, tomorrow, if we get back and the bears didn't get pressured, so they cast that doubt, it's like, well, this is the first time in a week and a half that we haven't gotten everything we wanted. Well, that means, overnight, maybe prices did stuff like this and we just never really got to where we wanted it to go. Then at that moment, what you need to ask yourself is, This is a change of character. What does that mean? And that's as far, you really shouldn't answer it. Look for the data points through the day and see how those line up with the change of character in the market. That's how you track a trend change. You didn't get what you expected, you start to see players act differently, and that's how you pick out trend changes. Players just don't do the same thing they were doing. What changed? What's going on? And what you're picking up on is that underlying attitude. I mean, this to me looks exactly like yesterday and the day before and the day before and it's all the same stuff so far. If we don't get our liquidation, then I'll go, hey, for once, we didn't get our expectation. Is this a change in attitude? And it would be. And we watch, and maybe the bulls come in and they get turned over and the bears start doing better. Then we say, hey, this is a change. And then we start looking at tension. You want to see tension get you a zero test. And typically, okay, this is a note that you probably should just keep in mind. Typically, there's a moment, and you'll realize this, where bulls start focusing on waiting for a daily zero test. All of a sudden, the bulls just like give up their immediate positions, like the liquidity positions, and they all start going, you know what, we're going to wait and we're going to buy at the zero test. And they just sort of step back and let the bears drive this right down, and then they wait till it gets there. They look for some volume like this, and then they hit that as hard as they can. And if they can get daily tension back away from zero and take over, they'll run another leg. And we see this a lot. The bulls just step back and say, you know what, we're not going to fight for this. We're not going to fight you for it. We have control of the market. We'll just wait for the zero test. What that looks like is like if you have a market drop down and you pick up bulls and it shoots up, and then the bulls sort of had a hard time, and then somehow the bears just beat them. You go, whoa, what? And then you have the bulls come in and they pick it up, and then the bears come in and they push it back. And you start saying, this game isn't working. It's not working. A lot of the times their focus then after a time or two shifts over here. I'm bringing this up because I will be paying attention to it tomorrow. You don't front run and stay ahead of a market through analysis. You stay ahead of it through analysis plus predicting what type of analysis you're going to need in the future. So you know what's coming. So I'm telling you this because I will be looking at this tomorrow. If the bulls struggle to get everything they want, this, then I'm going to start going, oh, are we moving into this phase? And if the bulls in the morning fail or get run over, I'm going to start saying, oh, they're going to shift their focus. And in that moment, you're going to say, how did you predict that? How did you predict all of a sudden the market was going to move down and the bears were going to give you a zero test? I say, that's what I was looking for. I saw it because I was looking for it. So I'm bringing this up now so that you could think about it as we go into tomorrow. We can't have markets where the dominant party is not doing nothing, where that they're getting pushed out of their positions. That happens. This comes into focus, the zero test. And daily zero test, leaning into a daily zero test can get ugly. Really, really ugly. So be ready. And yeah, so that's what I'm going to pay attention to tomorrow. It's like in the back of my head. I'm thinking, if this is where we get to, if we can't get everything I want, what is that? I'm trying to tell you what I think that means. So looking here, we are getting a bit of a sweep down. Maybe a little bit of an algo. Look at that. We got ourselves to 200. And look at that. We're getting ourselves a velocity zero test. Now, this means that this algorithm that's come in, which I think just swept down on the market a little here, we're almost to 100 here. You see how fast that was? Like at 400 a minute ago. We're already down to 100. This is the footprint of algorithms being run in the market. This is not the footprint of the change in sentiment. They're different. Sentiment doesn't move quick. It's slow. Algorithms chop advanced decline in hundreds. So we're almost down to 100 here. algorithms. Remember, algorithms are about work. So what this work needs to do is pop this down, not just through here, but through here. And then it needs to be able to sustain itself. It's going to be effective. Otherwise, this is going to be an algorithm into a bullish sample, and the bulls are here. And I don't know why they wouldn't pick it up. So that's what this is doing. We're getting ourselves a little algorithm here. 123. That's what that cost. You just had to move about 300 stocks. So you do the math. How much would it cost you to push 300 stocks down? That's a lot. It's not cheap. That's millions and millions of dollars put out there to try and make this happen. And if it falls apart, those millions of dollars could become capital that gets tied up in trying to fix your mistake. This can get expensive. So you need good reason to do it. So, they're not getting through this position. That algorithm just shoved the market down, and that's all it really did. It didn't get us through. We're not through. So we're getting a zero test here. We're getting a zero test here. We're waiting. You see there's no volume here yet. We're waiting for trapped orders to show up and show us the volume that's coming in. We're going to take a look and keep watching. And we saw this into yesterday's close. We saw that they ran some algorithms and it ran right into a bullish sample that ended up popping right up. It did put some pressure on the positions that were open, but it didn't effectively get any work done. It didn't stop out those positions and drive tension down. That's work. It's hard work. It's difficult and it's expensive. But that's what this algo will need to do. It's going to need to get down all the way to here. And that's a long ways to go. And maybe they got it in them. I don't know. Maybe they do. But right now, it's right at the zero. These bears are right at, their accounts are saying $0, and it's saying, would you like to cover? And they're going, no. I don't want to cover this position because it's going to go all the way down to $1 billion profit, which is the wrong choice, but that's what they're going to do. Because that's what everyone does who's in a trade that goes against them and then comes back to break even, is they move their take profit way off into the distance, assuming they were always right. And all that emotional nonsense they just went through gets converted into blinding themselves to reality. And they think it's going to go forever. That's just what happens. You get into a loser and you move your stop out of the way. You think you're the biggest winner on the planet. And it all boils down to, you don't cover on the break even. When if you were short right here and you're still in, which you shouldn't have been, you should take profit when you can get out at break even. Otherwise, you are exposing yourself to the worst kind of risk, emotional manipulation. Anyway, that's where we're at. I don't know. You can ask yourself, did they get the work done? Did that algo that we saw run right here that cost about 300 stocks, did it accomplish the work it needed to accomplish? Maybe they've got another algo. Maybe they do. I don't know. But that's what that algo did. It got us back to the backside of this position. We're putting some pressure on this position. There's another position to put pressure on. Then they got to get to the stop loss, and it's a ways away. Maybe they could do it. I don't know. Maybe. Let's see. So if we think about this in terms of tomorrow, you see tension is at 3%. So if we had if we closed right here and the market gapped down and say opened right at the lows, let's just say, then tension would probably open, I'm going to bet like here. Daily would probably open higher, just above, right like that. 30-minute tension would immediately get picked up right at the open. Immediately. The bulls would say, oh, great, a zero test. Frustrating because it took all night for the zero test to happen, but that's what would happen. So if we saw a gap down tomorrow, that's what immediately we'd see tension open. The bulls would treat that like a zero test and they would pick it right up. Daily tension would be here. It would potentially could make itself down and have a zero test. I think they would pick this. So tomorrow, if we gap down, it would look something like, one of those nasty open bars, and then it would probably look like this. That's what I think tomorrow would look like, because the bulls would pick up that zero test and do some driving. Now, if they can't get it away, then that's a little too far out and speculative. That's what it would look like if we gap down tomorrow. All right, we're getting our volume right here. Okay, so these bears and their algo right here that got us down to 100 from 400 or so has driven this down into a bullish sample. So now we're generating liquidity that's being offered to the bulls, and they can pick it up. And it's right at the same price that they bought into before. So I'm just waiting for this to finish up. Once we're done with our sell orders, then we'll say, here's the bulls. And remember, that was if the bears do any pushing, they're just going to push it right into a bullish sample. This is what that means. They did some pushing. Now, if the bulls don't pick this up right here, so if this position, let's say it finishes up, and then the bulls just, it goes, because the bears are going to wait. They're going to wait a minute. They're going to say, okay, you guys are going to eat that liquidity you just created. You're going to consume it and use it. If it just sits sideways and we see tension just sort of sit sideways, there's going to be this waiting. This waiting game. It's like, okay. And once they get done, if the bulls are going to do nothing, the bears are going to get a little more motivated. But they still have a ways to run. They still have a ways to go. After this, if it didn't work, the next thing would be to a decay retest, but we don't have time. We don't even have time in the day to hit a decay retest. There's just not enough room. It's rare to see decay just go into it just doesn't happen. So there's not enough time for the bulls to get into a decay retest position. So this will be their last position possible. And it was being brought to you by an algorithm that cost about 300 stocks to get us there. Yeah. You just have to wait for this volume to finish. Oh, we have like 14 minutes left or so. All right, 21. Come on, let's get it down. Let's get it down. So what did that algorithm do? It drove a buy signal. See that? So this algorithm's trying to say, all right, we're getting about done by showing you the bar like that. We got 4% showing up. So we're looking at 39.01 for this position. I'm thinking that's when I look at this, I think about 39.01 is about where it's probably going to be done. Give it a second. 6%. They find a little more orders. Okay. All right, I'll wait. I can be patient. Look at that, all the way to 52. So we're at like 450 stocks. Decided to go tick, 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 tick. And done. Okay, there it is. 39.01 is where it's at. These guys are probably going to put their stops, they're going to share where that they should be, which is here. Bears, wherever they may be, you're going to have their stops there. That's the landscape. So that position is now finished. So now we're going to take a look at tension and see for the next couple minutes and go, well, are they going to hit this or what's happening? Keep your eye on the advanced decline. It's near zero, so that's a thing. I would assume if the bulls came in and took a whack at this, we'd see it get to about maybe just under 200, like 190, something like that. If they came in and picked this up, and this is where I think they should pick this up. I expect these bulls to participate because that's what they've been doing, and we have opportunities for them. There's bag holders, there's structure, we have opportunities, we have all the things you need for the bulls to take this up. Just have to wait. You know, the root position so low, we could see some, we could potentially see some teeth on these, calling these a secondary position. I mean, this one's sort of being teeth to these guys, and teeth being you push through and pressure their stops, even though you don't really. We could see that. So we're moving down here. $94. Oh, back to 50. So that's not really what I was anticipating. Give it a minute. This is where I think that the bulls need to make that choice. Are we going to be looking at the zero test, or are we going to take, pick this up and run the opportunities that we have? I think that's the decision that's on the table right here. This is tough. I think at this point in this market, I don't know. Yesterday was easy, nice and clear. The last couple of days, I think in this situation though, with tension here, things get a little bit more difficult, and the reason is because this is closer to zero, which means that the bears, like if the bears run an algorithm here and try and jump tension down, there's just no way they're going to get it down under zero, no matter what they inject. But here, if they run algorithms, let's say tomorrow, they all just get together, there's opportunity that they could potentially get that down. So you have this, you got to keep that in your head. Like if the bears want to get tension down under zero, and the way to do that is to wipe out the counterparty, which would be getting to here. So you have to keep that in your head. You go, well, that is a possibility, but I think at this point in the day, they're not going to make that happen into the close. So at best, it would have to be a gap down. But I think if they did that tomorrow morning, they could probably get price down through here. But I think right in the morning, the bulls would just pick it right back up off of a 30-minute zero test. I think that's what would happen. The bulls would go, thank you. So it's like, I don't think you should be investing capital in that right now. It's not quite close enough. If it was a little closer, I think maybe the bears could pop it down here. But from here, it just, I don't. So just kind of trying to think about that counter argument here. I'm not sure that it's quite amazing yet. I still think the bulls want to pick this up. And we've seen bulls active here. We saw the bulls active here. We saw the bears get trapped here, which this was tinkering around. I mean, if you were holding short right here, you should have covered. You should be trying to buy out. And that should cause a decent sweep up. They should try to buy out and get out of their position. Let's take a look at options over here. Let's just take a look. We had something a little earlier today. We had some positions here, which while I was watching it, it felt to me like somebody was selling puts. These were probably worth a decent chunk, and it was a dumb position to try and sell puts out of the money right below, which is probably a ton. Then there was this right here, which I think was these buyers hedging their position, so they were in a positive spread. And that sort of put the kibosh on a lot of the market. So these guys are going to be almost impossible to run out because they have options ensuring their gains. There's no way to lose. Other than that, not a lot, nothing too amazing outside of that. So it looks like the lows are insured. So good luck blowing out the lows. That's going to be expensive. All right, we're getting a switch back here. You see that? So we popped down there. It took a minute or two to get that volume filled up. And now we're seeing the red. So here we go. The buy orders are coming in. Those orders are going to be sold to the people. So this is going to sample our bears for us, see what they're going to do. 39.01. Again, that's like 39.01. I just keep seeing 39.01. 39.01. Just keep saying that. Let's see what they can do. This is their last chance before the close. So if the bears don't pick up this position here, they don't do something in the last couple minutes here, then the bulls are just going to go like that. This is their last shot right here. This, and it's almost fortunate for them that it showed up, because they didn't have any opportunities, and now they have this little opportunity that potentially could give them, that's giving them some liquidity to participate with. So I'm not liking it. You know, I'm honestly like, the last couple days have been real easy. This is getting, I'm not as big of a fan of this situation that we sort of are looking at right in front of us. I liked the other markets better. They seemed a little cleaner. This one's messy with the way the nod worked out and how it's sort of stretched out and all over the place in here. So I'm not as big of a fan of this. The analysis, I think, still holds together. The players are where we think they are. They're doing what we think they're doing. Their risk profiles are what we think they are. It's just, I'm just not the biggest fan of the way that this is sort of working out. I guess you could call this a double down, because this short position absolutely didn't work, and now they're filling another short position right here. See if tension, we're at 4%, we're at about 100. We're about 100 on the advanced decline, so we'll see what happens. The bulls did not do much. If you notice, we went from the advanced decline of like, I don't know, like 50 up to 100. It's like, oh, you moved up, what, 50 stocks? That's not much of an impact. And it went right into the bears' hands, who got a sample. But I'm still bullish about it. But now the bears and the bulls are sort of face to face. We've got these positions just staring each other down. Well, who's going to do what? I think the bulls have a better chance. I think the bulls just need to like lean a little bit, just a smidge, and it'll turn these guys upside down, and that double down is going to look really stupid on the backside, because double down, because this didn't work and it's at a worse price. So you're adding to a loser is never a good strategy. It's never been one. But we'll see. I don't know. I'm just like, ugh. I'm not liking this as much. I just don't like the way it's sort of worked out here, and the way tension is. Something about it. It's just bugging me. It's bugging me. I don't know what else to say. It's bugging me. I stare at these charts all day. This bugs me. So that's my personal opinion feeling about it. But okay, we have bull, got our bears. They're done. Here's some other bears that did poorly. Here's our setup. This was the nod. We know where the stops are. I mean, it's like right in the middle of the range. I don't like it. I don't like it. I don't like it. I know I'm bullish, but I don't like it. I just, something to it. Something to it bugs me. I'm not sure why it bugs me, but it's rubbing me the wrong way. This is rubbing me the wrong way, this setup. I was fine with it yesterday when we did like move down pressure. I was like, nah, this isn't going to work totally. But today it's just irritating the crap. I look at this setup, and I've been following it, and I'm just like, ugh, bleh. I hate it. I don't know if you guys ever do that. Is it just me? You start to just sort of hate something. You're like, I just don't like you. It's almost like you want to sell it out of spite or buy it out of spite. You just start disliking it. Oh, maybe that, and that's 39. John saying that 3,900 is the highest open interest for options, the gamma strike. Eager bears double down on 30. Yeah, that makes sense. Yeah. The bear. So he's saying it seems like a lot of eager bears, which I think is true. We have seen a lot of eager bears, and then he's saying double down on the 30-minute zero test. Yeah, but the bulls are still, I think that even with the options world, the bulls are still going to defend their probabilities with the tension. That is in front of the bears, and it is a big problem. These guys, sure, if they're right, good for them. But structurally, it's not a good bet to try and front run what hasn't shown itself. Like, we just haven't seen it. We haven't seen the bulls failing. We've seen the bulls successful over and over and over and over. So yeah, I think there's probably a lot of eager bears, and that's been what's causing all these pops into every close all the time. Is just they keep hopping in. But this, no matter how I feel about it, this is still right in front of these bears, and it is a huge issue. And there's not much room. If you just run an algorithm down into the close, you're gonna be a baseball, and the bulls are gonna be the bat, and they're just gonna go right back in your face because they have control. I mean, they have control. So I'm still bullish. There's something that irritates me about this. I'm not saying sell. I'm not saying short this down. I'm saying just there's something about it just irritates me. It's irritating. I feel irritated, physically irritated with this. I don't know. Take that for what it's worth. I stare at these charts a lot, so I take that into consideration because I don't know. I get like just annoyed, and that's kind of how I feel. All right, market is closed here. The bulls have their position. The bears did nothing. Bulls were slow, so I think this is popping up. I think this is what we're going to get now. I'm sort of irritated with it, just letting you know that. Take it for what it's worth. I think we're headed up to, 30, 92 here. Let's get the ES price. A lot of you think into ES. I do. So I'd say 39.23. I think that's probably where that's where I think the stops would be for any bears who were trying to run this down and then ran into a problem. That's where their stops are going to be sitting right there. So overnight, I expect it to move up. What I don't expect is for the market overnight to blast out the lows. I don't expect this. That would surprise me a lot. I expect it to move up and get to our place. But it's sort of irritated me, and I'm weighing that in to say, like, I'm picking up on something that's sort of bothering me, but it won't change my behavior, but it will help me start to cue in behavioral changes in data points. I'm going to be thinking about this tomorrow. Okay, so look at that. It was just pressuring out anyone who is waiting. Look at that. We're up to 39.05. We got 2 bag holders. It just gave us a lot of pressure. That's how it is. Okay, so that's what I see. I think John is saying daily still strong and bullish. I'd be sweating it if I was. Yeah, I would too. I'm an irritated bull right now. That's what I am. I'm not a bear. Usually I'm either a bull or I'm not participating. I almost never go all the way to the bear. I just don't. I don't know. So my way of analyzing a bearish market is that I'm not bullish. That's how I say bearish, as I say I'm not bullish about this. That's because I don't like selling. I just don't. Okay, so that's where we are. Hopefully this all made sense. We've got our spots. We know where the guys are. We know where their stops are. We know our risk profile. Tomorrow is going to be a quick morning. I think tomorrow morning, if you don't already have in your head what you think tension is going to look like, you need to think about that. Could we get tension up and run it, down to 0 and pop up sideways? Kind of think about that, because I think tomorrow is going to be a quick day, quick morning. Stuff's going to happen real fast in front of us, so just keep that in mind. Overnight, I anticipate this moving up higher. I anticipate pressuring those bears who got themselves stuck here. That's what I anticipate. All right, I'll see you guys tomorrow. Good luck trading, guys.